Hey everyone, it's Alyssa Bride, and I'm a CPA here at Virtual Heights Accounting. And today I want to cover something specific, income levels in Canada. This video will give you some insight on where you stand compared to other Canadians. So let's dive into the latest numbers from Statistics Canada's 2023 Canadian Income Survey. We're using this survey because these numbers were released on May 1st, 2025, and are the most current survey completed. Let's dive in. And this slide just quickly shows you the sources that we've used from Statistics Canada. First off, let's clear up a few key terms. The median income is the first one we'll go over. Median means the exact middle. Half of households earn more, half earn less. It's different from the average, which can be skewed by a few people at the very top making a lot more money. So the median gives us a better sense of what's more typical. Another key term we have to define is what is after-tax income. After-tax income is the total income minus the income tax plus any government transfers. So GST, HST credits, the Canada Child Benefit, the Old Age Security, other government income sources that you earn that may not necessarily be included on your personal tax return. This is the money households actually control for spending and saving. So a much more important figure in determining your ability to actually spend and save in this economy. While it would have been preferential to use total income amounts that you just know, okay, I have a salary of $100,000, that is my total income. It's the after-tax income that really affects spending. And in a family, that can really vary greatly because one individual could be earning a much higher salary than say the other, and thus maybe after tax income of the household may actually be lower than two individuals with just splitting the same amount of total income but being able to access lower rates because it's split between them. So let's get into it. The median after-tax income in Canada for families and unattached individuals, so after-tax income specifically is the definition we just went over, is $74,200. So before I get into what that really means too much, I want to do an example. So the example will walk you through calculating after-tax income. Okay, so let's take a family as two parents, both the income earners and two children, ages 13 and 10, and they're located in BC just for this example so that I use specific rates. Net income, line 236 is 85,000. That would be from line 236 is from their personal tax return. And we just made it the same for both parents, both about the same income. So using 2025 income tax rates, the average tax rate for each of them would be 23.94%. So after tax combined income before any government transfers would be $64,652 each, or $129,000 about for the family total. But as I mentioned, they have kids. So, and based on the age of the children, they would receive about $2,900 from the Canada Child Benefit. So we're going to add that as a government transfer. Total family income after tax would be $132,204. Okay, so that is where this family with these income levels would fit in. And I just wanted to give you a slice of how you would actually calculate your after-tax income from your personal tax return. But then, of course, you'd also need to get that Canada Child Benefit amount or GST, HST credits to add to that. Let's get into the rest of it. Okay, so the median I said was $74,200. So that means that half of Canada has a after-tax income below that, and half of Canada has an after-tax income above that. And just remember, we're talking about families and also unattached individuals when we're looking at this calculation. And if you maybe expected it to be lower, higher, just remember that this is also talking about the entire economy. So from your pensioners that are still pension income is still an income inclusion calculation. So the pension income earners right down to the individuals that are just entering the workforce, the new graduates from high school, new college grads, things like that. So as well as those kind of more top income earning periods of of life, which tend to be more in that 35-year to 55, 60-year range, depending on retirement, of course. So that's we're talking about the entire economy. So top 25% is you're gonna to be able to hit that, be more kind of, I guess, earning a higher amount than more 75% of the top population would be getting up to 78,400. So it actually the jump from the 50% to 25% is not that big. A bit of a higher jump to get to top 10%, and then a much higher jump to get to 150 of the top 1%. And this was actually not a posted number, so we approximated this from the data that the Canada Revenue Agency did provide. And do remember, this is after tax amounts, okay? So the total income amount is needs to be before tax, so this is after you've already paid taxes to get to these figures. Looking up a quick example from the lower end side, the below 50%. So I just wanted to say a BC minimum wage, real life check. So the minimum wage currently 2025, $17.85 per hour. So full-time hours at 40 hours a week, that would get you a gross salary of $37,128 a year. If we had two individuals in the same household, both with minimum wage earners, no kids, just for simplicity for this one, $74,256 gross income before tax. After tax income for those two individuals, for that family, would be $61,946. There would be some other GST, HST credits adding on to that, some minimum amounts there, but with no other government adjustments, or as I said, considering no children's, all that kind of stuff, that they would follow below that 50% mark, which is likely is where we'd expect. And then again, considering that below median average amount, you're also going to consider in with that group the underemployed as well. Individuals that are not fully employed would be included in that group. This one shows a good graph of just showing you the progression upwards. Obviously, you can see how we start out and it continues to grow as we get up over the top 1%. This graph allows us to bring it all together, and I've also added the blue points on this graph to indicate where our examples would fall. So down here on the lower side here, this was our two individuals that were making minimum wage. They are below 50%. They were both working full-time but did not have children, so that would be where they would be on the graph. And then on the other example was two individuals with two kids making $85,000 per year each. And an example of a employment position where you would earn $85,000 would be a nurse. So in this family, I suppose there are two nurses and they have two kids. You can see that they are up on the upper end of the graph here and in the top 10% of Canadian income earners. So again, who is included in this Statistics Canada group? Canadian Income Survey covers people 15 and over in private households, including workers, students, seniors, pensioners, and as I said, after-tax income includes wages, pensions, and transfers, and as well as reducing for income tax paid. Key takeaways and conclusions from this video: the median after income in Canada is for 2023 is 74,200. Top 25%, 78,400. Top 10%, 111,200. Top 1%, 155,800. After-tax income reflects what households actually have left over after taxes and transfers. To see where you stand, check your line 236 of your personal tax return. And Take that amount less the income tax you paid in the same year, add household members for the same amounts, and add government transfers you receive, like the Canada Child Benefit or GST HST credits, and then you can compare. Remember, though, these numbers don't define your worth. They help us understand how Canadians are doing, how we ourselves are doing in comparison to our other fellow Canadians, and where policies and planning matter most. I hope you enjoyed this video and got some value out of it. If you do want to see more content related to this stuff, please comment and let me know what more you want to see. Thanks.